Hey, this is Trader Travis, and I have a snippet of a live call I want to share with you. And this is a call I did with students of one of my training programs. And I was outlining the things that you must know in order to trade options successfully. Now, all successful investing, whether it's stock investing or options trading, it boils down to 5 things. Really, you need to learn how to find good stocks, how to get in a trade, how to get out of a trade, how to take your profits and manage your losses, and then how to have the confidence to do that all over again. Now, that's a big picture overview. Now, in this call, what I did was drill down to the 5 micro steps, those little decisions that you have to make in order to implement the big picture. You want in order to come out on the other side successful. So let me load up this call and I hope you enjoy. All right. So for tonight's lesson here, as I stated earlier, and even in the email when I sent the registration link, I wanted to teach you all the 5 things you must know in order to trade options successfully. Now, these are really skills, and trading can't be really broken down into 5 simple steps, but it's a good summary. Yeah, it's a good summary. It's a good summary. So let's go ahead and start there. I'm just looking at the comments people put in here. Okay, so first, let's focus on trading skill number 1. Trading skill number 1 that all of you all, for the majority of you said you're okay with, is essentially knowing how to accurately understand and read stock price movement. And based on the, I like the way my mentor just put it the other day. He said, the market is based on emotions. And so you have to know the temperament of the market. And when you're looking at the market, you have to go in and say, he said, when people feel good, they buy, generally overall, right? When people feel good, they buy. When they feel bad, they sell. And when they're indecisive, they do nothing. And so he said, well, what you have to do is look at the market and ask yourself, is the market hopeful? Is the market afraid? Or is the market indecisive? So based on that, what we're going to do now is we're going to go through an example of that. We're going to go ahead and pull up the big 3 here. And we're going to look at, let's pull up the S&P 500 here. And let's go ahead and get rid of everything. So looking at this, we trade from the right of the chart. I have a 1-year chart. Let me pull up a 9-month chart here. Let's pull up a 9-month chart. Okay, we trade off the right-hand side of the chart, but we see the overall 9-month trend. But trading off the right-hand side of the chart more recently, because we trade in real time. So looking at this, what will be your answer? Is the market hopeful? Is the market afraid? Or is the market indecisive? What would you say about that? And then go ahead and test and type in your answers in that question panel. So indecisive, everybody's putting sideways, indecisive. Okay, great. See, now I have 0 technical indicators on my chart. 0. You don't need them. They help, but you don't need them. Sometimes they can be a distraction, but I do use them as visual aids. But I recognize that really what you really need to do is get in tune with price movement or the emotions of the market. And what you're seeing right here is, yes, the market is flat. Now, again, I said I used trend lines and technical indicators. Now, if you want a visual aid here, you can draw a little trend line here. And you see that, okay, wow, since, let's see, this is December 26th, right, or 24th and 26th. And since then, we can see the market's been in a channel. It's gone nowhere. And that's been almost a month now that the market is trading sideways. So overall, the last 9 months, yeah, it's been up, but right now recently it's kind of indecisive. So it's like a up indecisive. I've been up, but right now I'm indecisive. So channeling, as Fernando talked about it. So that's that. So right now it's indecisive. So based on that, trading skill number 2 is we look at the market. Well, first we look at the market, we see what it's doing. It's indecisive, all right? So you put that on your checklist, you keep it in your brain, however you want to do. So that's your first thing. So the next thing goes back to trading skill number 2 is, well, then we need to dig in our bag of tools and pull out a strategy that's best suited for the current market environment or temperament. And then we also need to find the best strategy for our personal psychological makeup. And the way I like to think of it is your tolerance for risk, essentially. Because I found that if you use the wrong strategy too many times, what it does is it essentially puts you on an accelerated path to failure. And one of the, I'm glad my friends urged me to learn other strategies because I resisted it for years. I was comfortable with calls and puts. I did not want to go outside my comfort zone of just buying calls and puts. But what I found is that when people only know one strategy, I didn't really suffer from this that bad, but I did see others that suffer from it. When people only know one strategy, out of pure habit, they always try to use that one strategy. But you know what? Sometimes it's best to just sit on the sidelines. And I would see a guy in a bear market, and he was trading calls, buying call options in a bear market. And we were like, what are you doing? That was his habit. For the last 5 years, he had been buying call options. It's the only strategy he knew. So out of pure habit, we were in a bear market, and he was buying calls and getting killed, losing money left and right. And I'm like, gosh, no, just sit out. But that's hard to do. They say old habits are hard to break. Now when you know several strategies, that's good too. But then a person knows several strategies, but they don't know how to look at the market and figure out which strategy should they trade. All right, so now let's go back to looking at the market here. Everybody's saying the market is indecisive or sideways. So what templates can we use? Can we use the DMA template? Can we use the PR template? Can we use bullish or bearish credit spreads, cover calls? What can we use? Go ahead and type in. So people are putting in cover calls, credit spreads. Okay, so nobody's putting in nobody's putting in DMA or PR. All right. Okay. So, all right. That's good. All right. So great. So you all are good with that. Okay, great. So everybody's saying that we can use credit spreads or cover calls. Absolutely correct. Here's why, for those who are wondering why they came up with those answers. Well, directional templates are the DMA template or the PR template. They're essentially buying calls or put options. Essentially in this market, buying call options. They absolutely 100% need market direction. So if you have been trying to use those templates right now, what you've been doing is being frustrated. And that's fine if you're new, you're trying to implement this stuff. Get out there, implement it, get frustrated, because it's a good learning experience. So in the future, you know what, when the market is sideways like this, maybe I should sit in cash until the market picks a decent direction. Another thing that newest traders struggle with is sometimes they can't really see that the market is stagnant until someone points it out. And then they're like, oh, I see that. I never saw that before. Because generally what happens is people are so, seduced by the technical indicators. They look at the technical indicators, and that's all they focus on. Especially like wins per cent it's a huge hiccup, I notice, for a lot of people. They'll be like, the wins per cent is overbought. It's time for me to get in. But you know what? They never took a step back and did the naked chart analysis and looked at what prices are actually doing. Forget the indicators. What are prices doing? And they never noticed that, prices are really stagnant. Probably not the best time. So in this case, as the market is stagnant, yes, you can do credit spreads or like covered calls, because those are like income strategies. And income strategies, by their pure nature, they don't really need market direction. Market direction helps, but the way income strategies work is you're selling time decay. You're going to sell your option out into the market. Let's put up SPY here. And most people, not everybody, but most people, when they're doing income trades, they will sell an out-of-the-money option. And an out-of-the-money option has no intrinsic or no real value. It's just comprised of time value. So let me see if I can pull up the time value here. Okay, so you can see here, these ones are showing, they're showing no intrinsic values out of the money options, no real value. Okay, so no real value if you exercise it. You wouldn't be at a profit. So it's just time value, extrinsic or time value. So what you're doing is selling that. You're getting 45 cents or $45 of time value, and what you hope is that the stock stays where it's at, or essentially this option that you sold, whether it's a call or a put, you want it to stay out of the money, because as time goes on, time decay eats away at that option's price. And so you're selling time. So essentially, in a markets like this that are going nowhere, people will come above or below where prices are, and they will sell time. And all they hope is that the market just stays exactly where it's at, because they'll bank away from time every single. They'll have a higher chance of success as long as the market stays flat like that. All right. So that's what most people do. I have not took that stance, because I am by nature really a trend trader, meaning that I trade based on trends, when the market is trending right. I still do income trades, but I feel more comfortable doing them when the market is trending a certain direction. It's just, I was taught to be a trend trader from the beginning, and I've just stuck with that. That gives me the highest chance of success, but maybe not you. Going back to trading skill number 2 here, you need to know the strategy best for your current market environment or your psychological makeup. So the best strategy for the current market environment is an income strategy, covered calls, cash secured puts, vertical credit spreads. But that's not the right strategy for my psychological makeup. I will get stressed if I do like a vertical credit spread here and I notice the stock is going against me. I'll get stressed. So for my psychological makeup, I need the market going up a little bit. I feel comfortable doing covered calls and cash secured puts. Yeah, I could trade those. Okay, now so now let's move on to trading skill here. So before, I already asked you what templates can we use. So now trading skill 3, I won't spend too much time on, especially since most of you all, a lot of you all had this down, is you need to have a formula that kind of tells you how much money you can safely invest in a trade. So far we went through steps 1 and 2, skills 1 and 2. We looked at the market is trading flat. We looked at what strategies you can trade. So now we're looking at, okay, if I am going to do a vertical credit spread, a bullish or bearish credit spread, well, how much money can I safely invest in a trade? And this alone could be kind of fleshed out into its own separate course. And I kind of touch on that in the training, so I won't touch on it more. But, I use something as simple as a 2% rule. All right, I'm back with a quick recap before I let you go here. We spent an hour on this call going over all 5, and I want to keep this little training as short as possible, so I won't have time to go over all 5. But just to recap, number 1 was, knowing how to accurately understand, what prices are doing in the stock market. Are people happy? Are they afraid? Or are they indecisive? Trading skill number 2 is, digging in your little bag of tools and knowing what's the best strategy for this current market, as well as, my own personal psychological makeup. I'm a scaredy cat. So nowadays I use conservative strategies. I leave that cowboy sling and get rich quick stuff to newer traders. So I don't try that. Trading skill number 3 was, you need to have a formula that tells you how much money you can safely invest in a trade. Now, on the call, I went over the specific formulas I share in the training program, but I'm going to give you a tip here. You don't even have to get that complicated. If you don't have a formula yet, use what one guy called your squiggle number. Look at your account size, how much you're trading with. Pick a dollar amount that you're comfortable losing, because you will lose money as a trader. Believe that. So pick a number that you're comfortable losing. Pick a number that you are uncomfortable losing. Okay. So let's say you had a $10,000 account and you say, I'd be sick to my stomach if I lost $2,000. Okay. That's a number you're uncomfortable losing. But I'd be okay if I lost $100. I'd sleep okay. I can go to bed. All right. So that's 2 things you can do. Another tip there is that if you can't go to bed peacefully, if you go to bed thinking about some trade you have open, wondering how the market's going to open tomorrow, and you're always scared that the market is going to reverse on you, that lets you know that you're investing too much. So scale that number back until you can go to bed peacefully and not really care how your investments work out. Because when you don't care how your investments work out, then you are less likely to invest emotionally, which is a huge reason why people fail. Trading skill number 4 is you need to know the best. All right. The best option to pick, the best time of day to enter and exit the trade, and also being able to recognize on a stock chart the best place to get in or out. And on this call, we went over a few examples of this, but let me move on to trading skill number 5. Well, first, before I move on to trading skill number 5, I have here that skills 1, 2, and 3 help determine this. So if you get skills 1, 2, and 3 right, learning the market environment, learning what strategy to use, and also the formula, that actually helps you with trading skill number 4, figuring out the best. Because the best option to pick sometimes has to do with, how much money am I investing and what strategy I'm using. So just some tips there. Trading skill number 5 is you need to have a trade plan as to how you will manage your trade, both if things go right, but more importantly, what will you do if things go wrong? I see it over and over and over again. Most people only focus on profit potential, how much they can make. losing money is an afterthought. It's not until they're in a trade, the trade goes against them, they're losing a ton of money, and that's when we get those emergency emails, not from people in our trading program because they know better, but to strangers and the general public. They're like, I'm losing a bunch of money. What should I do? Well, that's a decision you should have had cleared before you got into the trade. You never enter a trade unless you have a plan. If things go my way, how am I going to manage this trade? And if I wind up losing a bunch of money, what am I going to do? You want to be like a paramedic coming on the scene of an accident who is calm and cool. You don't want to be irrational and emotional. If you got in a car accident and you were bleeding and a paramedic came to you, he's all frantic and about to faint because he saw blood, would you feel comfortable having that person tend to you? No, they are just as calm and cool because they've practiced this stuff ahead of time. They know exactly what they're going to do in a certain situation. You need to apply their training to your trading also. They're training to your trading. And so those are the 5 trading skills. And honestly, ask yourself with 100% certainty, are you good at all 5? How many are you good at? Are you good at 1, 2, 3, maybe 4? Because in order to be a top performer, you have to be good at all 5. If you're not good at all 5, then your performance will suffer. And a lot of people aren't aware of this. Yeah, they'll get lucky or make a little money here and there, by being good at only 3. But you don't want to base your financial future on getting lucky here and there. You want certainty, and you want to be confident that no matter what is going on in the stock market, you will be able to make money. And so, before I let you go, I'm about to upload the final takeaways I gave these students with my final lessons for the night. And so I won't be back. But if you found this video valuable and you think some of your friends may enjoy it, please share it with them via the social media links below. Or if you want to make sure you're up to date on any new videos I release, just subscribe to my YouTube channel or click the link below, and that'll take you to our website where you can add your name to my private email list. So you take care. Let me load up the final takeaway message, and I will talk to you another day. All right, talk to you soon. Bye-bye. Now, before I let you go, I have some final takeaways for you tonight. If someone is saying they're not getting results, like, hey, I'm losing money, I'm not getting results yet. Someone helped me recently, and this is the guy I was being mentored by. He said, you know what? When people say that, what they don't realize is that they are getting results. It's because they're learning the process so that they can be prepared to create the outcome that they want, which is making money. He said, but what a lot of people do is they want to make money. And so they skip that whole process of learning and everything else, and they just shoot straight to trying to make money. And he said, yeah, you can get lucky a few times, but your luck eventually run out and you'll end up broke. And I was like, yeah, you're right. A lot of people look at, they only measure results by money, but they never measure, like, how much have I actually learned? I can now carry on a conversation about trading, and I never could do that 2 months before. So recognize that it's all about the learning process, and those are some of the results you're getting also. Next thing is learn from your mistakes. I put this quote in the end of the email, and I thought it was a great quote. It's saying, learn from your mistakes but never regret, because one day you'll realize that sometimes the wrong choices bring us or you to the right places. And what my takeaway from that is, no matter how many mistakes you make or how slow your progress, you're still way ahead of everyone who is not trying. The people still sitting on the sidelines skeptical. You are light years ahead of them, and you actually have a fighting chance to have a financial future of independence and wealth. So everyone, I thank you for allowing me to tithe into your life. You have a great week, and I will get this replay out to you either late tomorrow night or first thing Thursday morning. All right, you all take care. This call has added some value to your life. I hope you like the content tonight. Take care. Talk to you soon. Bye-bye.